There he is. Hey, Brett. Are you going to wow us, buddy?
What's that?
Are you going to wow us?
Yeah, of course.
What's your focus today?
I'm going to explain why the whole crypto space is not going to end the banking industry as we know it. Something else is going to end the banking industry.
Brett King. All right, buddy. See you soon.
Man. Thank you. Thank you. When was the first time you heard the term blockchain? If you're like most people, you probably heard it associated with the Satoshi white paper back in 2008. And at that time, a lot of the crypto guys were talking about the potential to disrupt the banking system, particularly central banks. And so this was the promise that crypto held, particularly cryptocurrencies. It was going to change the world of banking. It was going to create currencies that existed outside of the centralized banking system. But crypto has created new asset classes. Yeah, we just hit 3 trillion. Yeah, it's been discounted a little bit lately, but it hasn't really disrupted the central banking model. It hasn't disrupted traditional banks. Some of the biggest banks in the world are still here. But there is something that's disrupting the banking space right now. And this is the fintech industry. In Q1, we had the largest ever quarter of fintech funding, 28 billion, followed by Q2, 31 billion, and then 35 billion for the third quarter. That's almost the same amount as the total amount of funding in the fintech space that happened in 2020. So fintech is super hot right now. And crypto's a subset of this, obviously, but the big dollars are going into bank replacement organizations, technology companies that are replacing banks. We call these today neo-banks or challenger banks. The largest challenger bank in the world hails out of China. Of course it does, because everything in respect to digital technologies coming out of China now is incredible. $70 billion market cap, 200 million customers in just the space of 6 years. No traditional bank has ever grown as fast as this. Not only that, but their average cost of acquisition for a new customer is just 75 cents per customer. Their operational cost under $2. Roughly half of their customer base today, this is the first bank account they've ever had. So this is the largest challenger bank in the world. Started by the guys from Tencent back in 2015, and today, 200 million customers. That's twice the number of retail customers that JP Morgan Chase has. This is phenomenal. You could not create a bank like this in the days gone by because you'd have to use branches, you'd have to go sign a piece of paper, all of those sort of things. This is what banking is becoming. Another great example is the largest non-Chinese digital bank in the world, Challenger Bank, new bank. They just IPO'd. They raised $750 million in June. They were at 40 million customers last year, and they're at 48 million customers this year. 20% growth is unheard of in a regulated industry like the banking space. But more than that, their cost of acquisition is amongst the lowest in the world in respect to retail banking. Over half of their customers already use Nubank as their primary bank account. And their credit card delinquency and non-performing loan ratios is well below the industry average. They're operationally much more efficient than the other banks that they compete with in Latin America. Today, just last week actually, they IPO'd in the United States at a $50 billion valuation. Why is that significant? Because that makes them the largest bank in the Brazilian market. Itaú, who's the largest traditional bank in that market, has a market cap of 39 billion and 55 million customers. But they're not growing at 20% a year, like Nubank. These new digital competitors are doing things that traditional banks could not do, especially when it comes to taking market share and growth. Revolut, you might have heard of, in the European space, recently making their entrance into the US market. 16 million customers. They raised $800 million in July of 2021. NYDIG, a crypto firm you guys might have heard of, doing crypto custody for traditional banks, they just closed $1 billion round. It was announced yesterday. These new entrants into the market have one differentiator that's clear from all of their traditional incumbent competitors, and that is their ability to scale based on digital technology. And that's what they share, these challenger banks share with the likes of the social media networks, the big tech companies, the ability to grow rapidly at scale using the tech. 38% of all salaries in the United Kingdom today are paid or deposited into challenger banks. This is evidence of changing market share. This is not a future state. Nubank is already the largest bank in the Brazilian market. Soon, they'll be the largest bank across the entire Latin American segment. WeBank is the largest digital bank in the world, but they're already in the top 10 banks in China, one of the largest markets in the world. In the UK, we see almost 40% market share for direct deposit on salary accounts. This is significant. N26 is another example. They raised $900 million. They have 7 million customers in the German market. They are the second largest bank in the German market today. These guys have all come out of nowhere. Since 2013, 2014, these challenger banks or neobanks have come onto the scene and they've acquired not just customers, but market share. This is the shift that's taking place globally. Chime, another example in the United States, 750 million raise in August, 20 million customers there. Years ago, it would have taken you, even if we just go back to the 2000s, when the dot-com era was still happening, it still would have taken you 10 or 20 years to think about raising a customer base of 20 million customers. The only way banks like HSBC and Citibank in the past could do that was acquiring another bank. They couldn't grow this quickly organically. The biggest banks in the world by the end of this decade will all be digital first, technology first players. So the disruptors for the banking space aren't necessarily the crypto players. We'll talk about that in a moment, but certainly they're digital first. Now, some competitors are trying to replicate what the digital pure plays have done. For example, DBS Bank, who's quite a successful bank in Singapore, made an entry into the Indian market by investing $200 million in launching a new digital-only bank, DigiBank. And they've acquired 5 million customers. But compared to the pure plays, the challenges that we've seen, these corporate-led digital pure plays, more successful than their contemporaries, but not as successful as the startups. We see NAB acquired 86400, a challenger in the Australian market. We're going to see these acquisitions taking place over the next couple of years as we see these traditional banks realizing they're losing market share, realizing they can't replicate what these challengers are doing, and trying to acquire those technologies. But it really comes down to culture. That's the big difference. The first $1 trillion bank is not going to be ICBC, JP Morgan Chase. It's not going to be one of these traditional players. It's going to be one of these technology-oriented players. It may not actually be a neobank or challenger at all. It may be a mobile wallet play. We're going to get into that in a moment. Chase tried to launch their own challenger bank in the United States and failed. They've invested now $750 million in launching a challenger in the UK market called Chase. But they sit on top of fintech. They're working with 10x technologies. They're working with Thought Machine, an AI-based core system. They're trying to do what the fintechs are doing, trying to copy that. But we're not talking about big customer numbers for these traditional players generally that are trying to replicate what the digital players do, because they don't have that top-down digital culture that's really key. But the big change, the thing that's really going to disrupt banking, is actually not these challenger banks at all. It's the way our use of money, the way payments, and the way value stores are evolving. So when we talk about Bitcoin or we talk about crypto generally, cryptocurrencies and so forth, we are talking about new stores of value. We are talking about new payments mechanisms. That was really the promise of the Satoshi white paper back in 2008. But if you look at the biggest change in respect to day-to-day banking and payments, it's coming from mobile wallets. Alipay, Tencent WeChat Pay, Paytm in India, Gojek in Indonesia, these super apps. This is where people's behavior is changing around money. And these wallets give us a connection not only to the old payment rails of the traditional banking space, but these newer payment rails and newer value stores that are emerging. You need a wallet for crypto. You need a wallet for NFT. You need a wallet to buy a coffee at Costa Coffee. This is where these worlds are merging together. And so when we look at the impact of mobile wallets, these are the sort of numbers we're talking about. In 2020, Alipay and Tencent WeChat Pay, the two largest mobile operators in terms of mobile wallets in China, did $52 trillion of mobile payments volume. That's 3 times China's GDP. That's twice all of the plastic card payments in the world. We're talking debit cards, credit cards, gift cards. All the plastic cards in the world you can imagine, 35 trillion in total mobile payments. In the US, just 7 trillion of plastic card payments. Only 300 billion of mobile payments. China, meanwhile, 52 trillion. This is where the future of day-to-day discretionary banking and payments is coming. It's coming out of China with mobile wallets. It's coming out of emerging markets. In the KSA, we have STC Pay. In India, we have Paytm. In South Korea, Kakao, Gcash in the Philippines. This mobile wallet ecosystem that's growing around the world already has left the plastic card market behind. And banks are still issuing plastic cards to their customers. They don't get it, right? The 21st century requires a digital services layer underpinned by digital identity and digital payment mechanisms. But of course, when we talk about China, we're obviously going to be coming up against people that say, what about facial recognition? Is it safe? What about civil rights? Well, you might have heard of the largest shopping day in China. It's called Singles Day. It was invented by Alibaba and Taobao as a sort of response to the Cyber Monday or the Black Friday type shopping events that you see in the United States. November 11th of this year, they did 85 billion of sales in one day in China for Singles Day. Now, on top of that, how did the mobile payments network fare? Well, Alipay was handling 460,000 transactions per second. Why is that significant? Visa can handle, theoretically, 32,000 transactions per second, but it's never got to that limit. So this is already doing 10 times the transaction volume in any one point in time than the card networks of the world. The fraud rates, because of biometrics that are built into these mobile wallets, the fraud rates that Alipay have are fractional, just 0.0006 basis points of fraud. This is really critical when you're dealing with NFTs, crypto, and so forth. We need secure wallets that can't be exposed, that can't be compromised by hackers. Mobile wallet security is going to be essential for the future of this sector. How does this fraud rate compare with what we're used to seeing in places like the United States? Well, card-not-present fraud, which is when you use a card to pay for stuff online, card-not-present fraud in the United States is 11.2 basis points, 10,000 times higher. Your credit card and your debit card is 10,000 times less safer than using a Chinese mobile wallet. You don't hear about this in the US. Mobile wallets aren't a big thing. Yes, they've got Apple Pay and Google Pay and so forth, but it's these incumbents that are sort of keeping this behavioral shift from happening in markets like the United States. The real shift, though, is the fact that these wallets that we're going to be using in the future don't work like a traditional bank account. They're smart, they're intelligent. They are starting to build in features around our behavior when it comes to money. And so when you look at mobile wallets like Apple Pay with their Apple Card that's supported by Goldman Sachs in that market, you can see the focus is on helping you understand where you've spent your money. Categorization, showing you a geotag of where you bought your coffee as an example. This type of visualization and awareness of your spend increases the control you have over your money. We are going to see mobile wallets evolve with artificial intelligence, so we can ask them questions, for example, like, hey, Siri, can I afford to go out for dinner with my friends on the weekend? Well, if you invested in NFT, the answer is probably yes, but the point is, these wallets are getting smarter, and that's the divergence that we're seeing from the traditional banking system. Plastic cards are dumb. They really don't tell you anything, except for maybe the transaction succeeded or failed. The mobile wallets we're talking about that will be embedded in our life in the future, these are intelligent. They'll give us access to credit when and where we need it. They'll help us actively save money over time so we can become more financially healthy. This is the type of technology we're really seeing in development now. And for the rest of the world, particularly on the African continent, for the unbanked in the Gulf region, for the unbanked in Indonesia and places like this, their first bank account won't be something that they got from a bank branch. It'll be something they downloaded to their phone or is just embedded in the operating system. And when we talk about the metaverse and we talk about being immersed in this new augmented reality and virtual reality worlds, are you going to swipe a plastic card on a virtual POS machine in the metaverse? No way. You're going to use a smart mobile wallet that's digital in nature, that sits in the cloud, that can bridge these two worlds between the physical and the virtual. The traditional bank account issued by traditional banks can't do that, unless they, of course, adopt this wallet technology. But banks are still issuing plastic cards. And if you're in the US, they're still giving checkbooks. Like, don't even ask me to explain why that's still a thing. And of course, the contextuality of financial services is critical here. As we go real time, those products we used to get from the bank, like a credit card, like a savings account, like an investment account, as these get digitized, they get embedded in our world, so they have higher utility. So a good example of this is buy now, pay later, contextual credit. You don't need to go and get a credit card before you buy a Peloton bike or even before you buy a new Tesla or something like this. These credit options will be available to you in the moment when you want to make that purchase. And this will be through smart wallets embedded in your world, not those traditional bank accounts that we've thought of. In this world, you don't really need a credit card. Let me give you a better example. Let's say you go to Carrefour, to do your grocery shopping. I know some of you might have had this happen in the past. You fill up your grocery cart, you go to the checkout, and you give them the card, and the cashier swipes it, or they do the chip and pin, and the cashier gives you this look. I'm very sorry, sir, your card's been declined. Now, I know some of you haven't had that experience, right? But some of us have. But you're in the grocery store, what do? You're trying to buy your groceries, and then you're thinking, what, is my mortgage come out? Oh, no, it's a Saturday. I didn't get my salary yet, because banks don't work on Saturdays, of course, right? So what's your solution? Well, if you're a banker, the banker's going to say, yes, you've got to come down the branch, you apply for a credit card. If you're not too risky, we might send you a piece of plastic. And this is the way you'll solve that problem. But technologists in the digital space say, none of that is necessary. We know where you go grocery shopping. We know what you spend on groceries. We know you just walked into the grocery store and you don't have enough cash to buy your groceries today. So let's solve that problem for you. Let me give you access to cash to buy your groceries. That's a smart wallet helping you with access to the utility of banking in real time when and where you need it, not giving you access to a bank with its products and services. It's embedded utility of banking. The ability to safely store money, the ability to safely move money, and the ability to access credit. That's what these smart mobile wallets will do. The next technology we're going to be using for this is smart glasses. This is Facebook's Project Aria. We're going to see in 2022 both Facebook and Apple announcing smart glass technology. And so think about the sort of world where you'll be using a computer with a head-up display with built-in capabilities like a wallet. They have cameras and LiDAR detectors that can recognize objects in the real world around you, faces of people that you see, and so forth. You could ask your smart glasses, hey, do you know where my car keys are, where I left my car keys? And your smart glasses using image recognition will be able to tell you left them on the coffee table. When you're out in the real world and you go to your coffee shop for your favorite coffee, it'll negotiate with the coffee shop to give you your favorite coffee. It'll take your online preferences into the offline world, again, bridging physical and digital worlds. But you're not going to take your glasses off and tap them on a point of sale. So mobile wallets are going to be formless in respect to the types of payments we're going to transact. In this world, the types of bank products that were available in the 20th century just don't make any sense. It has to be real-time, contextual. So when you walk into a Tesla dealership, your glasses might tell you, dude, you can't afford a Tesla. Here are some cheaper options for you. Or it'll give you access to a line of credit as you walk into the dealership, contextualizing your financial services experience. This is the intelligence part of the smart wallets that we're going to see. And it'll be based in the cloud, not based in a piece of hardware, and you can use it in the online world and the offline world. And so this ecosystem that is emerging is really made up of three sets of players. The tech giants that own the technology infrastructure will be using day to day for access to these banking and financial services experiences. The banks that survive this and become part of this ecosystem by having new tech stacks and digitizing APIs, changing their culture. And of course, the fintechs, the crypto players, the challenger banks, companies like TransferWise, now called Wise, NYDIG, these players that are working on the specialist technology to power this future ecosystem. By 2025, and that's just 4 years away, more people will get their first bank account on a phone than they will from a bank. In fact, based on the wallet stats you've seen today, we can already say that. But this means that when we talk about a bank account, when our Gen Zs and our alphas, our kids talk about a bank account, they're not talking about an artifact they got from a bank. They're talking about a digital artifact that sits in the cloud that helps them manage their money. This is the first change in the definition of a bank account since the 14th century in the days of the Medici Bank. This is a huge shift. And underpinning this is the way money is evolving. So the most successful central bank digital currency program in the world today also comes out of China. This has been obviously spurred on by the success of cryptocurrencies. Why did China ban the Bitcoin mining in the Chinese market? Well, part of it is Bitcoin was a competitor to their CBDC. The other part of it was it had energy implications for their market. But already in a dozen cities around China and in 8 cities outside of China, CBDCs are being trialed. In Hong Kong, they just announced real-time payments infrastructure in Hong Kong will incorporate the CBDC. Alipay and Tencent WeChat Pay, they support the Chinese central bank digital currency. When they wanted to pay stimulus payments to Chinese people affected by the pandemic, they used mobile wallets and CBDCs in places like Macau. And if you're visiting the Beijing Olympics next year, you're going to be using a Chinese mobile wallet with China's CBDC. This is the first real-world implementation of a government-led cryptocurrency to compete with the decentralized world of crypto. The real issue here is the United States, who pertains to be the most sophisticated and most advanced banking system in the world. When it comes to mobile wallets, when it comes to CBDC, They're 10 years behind China right now. So this is the key. If you want to disrupt banking, if you want to disrupt asset classes, investment, payments, the key is growth. And all of these organizations we've talked about, the challenger banks and so forth, they've cracked the secret formula of digital scaling, the ability to acquire customers at digital scale. And that's what is going to be driving the shift away from traditional bank artifacts to smart mobile wallets over this next decade. And that's the future of what we used to call banking. Check out my new book, The Rise of Techno-Socialism, just launched in November, on November 21st. Thank you very much for your time.
Don't go away. Got a question. Wait. So what's interesting about Brett, like I said, I've known him for about 15 years. He focused on the banking space for the first half of that, if not more.
Correct.
And turning into a futurist, you're using all the knowledge of what you learned from the banking and finance industry to kind of predict where things are going. I think this super app thing is so much bigger than I think you really had time to talk about.
Right.
So when we look at Kareem and we look at Grab and Gojek, they become dominant forces in those countries, right?
Well, the critical thing is, if you look at the super apps, they're part of the evolution of the services layer. 21st century is all going to be about digital services. Access to education, access to healthcare, access to food delivery services, groceries, et cetera, et cetera. And to have a digital services layer, you need digital identity and you need digital payments. And so the super apps become an excellent mechanism for sort of creating the momentum behind these digital wallets.
And then the gamification of the super apps. So if I wanted a ride or a food delivery service, eventually, if it starts to look at my lifestyle, it might open up new layers for the way we live. So all of a sudden, something like Kareem could be much more sophisticated as I get older, the more I earn. So what happens then with governments and super apps?
Well, this is where governments have to sort of think, do they want the super app sort of driving this digital layer or digital infrastructure, or are they going to come in and get ahead of the game?
Like Didi.
Yeah, exactly. And that's the big challenge that we see, around, like particularly in the space like the US. The US is sort of like, we'll let the commercial markets and the free markets sort of do this, but then the governments lose control over the supply chain and distribution systems.
That makes sense. Why should people read your book?
Because it really describes the solutions that technology is going to afford us in terms of things like inequality, the displacement of employment by artificial intelligence, and how as a human species, as a family, we really need to respond to the issue of climate change.
And where do we go for the book?
You just, anywhere online, just go to technosocialism.com to check it out.
Now give Brett King a big thank you so much, Brett.
Thanks, brother. Thank you.